Hello everyone, this is Nick Perry of Schaeffer's Investment Research with your chart slideshow for Friday, January 19th. Today I am back with my weekly check of the broad market indices. In last week's chart slideshow, we were discussing the ongoing uptrends that remain in place. We talked about support, the SPX had support in this area here. I was talking about watching those highs there. On the Dow, we had support there, and also both of these indices are right at their 50-day moving averages, right here and right here. The comp had actually bounced off its 50-day moving average and was pushing above those highs right there. The RUT, we talked about it kind of just being in this range, defined, sort of in that area right there. So the overall takeaway is basically keeping an eye on the RUT in that range. Talking about the SPX, pushed up near those highs, but kind of focusing on the comp because this was an interesting situation that we were seeing the comp sort of leading. That's something that hasn't been in place for a while. So let's go ahead and turn to this week's charts. When you look at these charts, probably the first thing you notice is that we've had a bit of volatility. Let's go ahead and start, in order to talk about the SPX. One of the things you'll notice here on each of these charts is I've actually updated these gray longer-term support zones. I'd kind of gone away from doing that, and I thought it was important to kind of bring that aspect back into these charts, to offer some consistency of a level we're watching. So from a longer-term perspective, this area right around 1400, which we've been talking about, continues to be important. But the near-term action, you can see that the SPX popped above these recent highs right here, and now the index is sort of, testing the waters above there. It hasn't made a definitive break above, just sort of ticked above it, and we haven't seen any sort of pullback yet. So it just seems to be testing the waters. When we turn to the Dow, it's pretty much a similar picture as the SPX. I mean, you've got this gray support zone here. You've got the highs here. We've got a little tick above that and sort of flirting with it. Nothing all too significant right there. It's just basically the same thing we discussed on the SPX. As far as the comp goes, I think that's the most interesting situation. We talked about these peaks right here and the break above that. We saw a pop above, a few days trading above that level, and now we've seen a sharp pullback. The sharp pullback happened yesterday. A lot of chatter about Apple's earnings and not necessarily being up to snuff. So we've seen a pullback here, and while this, we've sort of had this dramatic pop and dramatic plunge, dramatic being relative to the recent action that has been pretty muted. The overall trend hasn't really suffered, hasn't really broken down. Basically, this current pullback brings the comp right back to its 50-day moving average, slightly below these highs here. The top of this little mini range. But it doesn't appear to be all too worrisome, at least where it stands right now. What I would keep an eye on is this support zone near 2400. This was the sort of the bottom of this little range here, and if we saw a break below that, now we'd start to potentially have some concerns here. At least I would, just from the standpoint that you had an uptrend, you've got a consolidation, you see a breakout. You'd like to see that breakout hold. If we get a little bit of chop around the bottom of it, I wouldn't be too worried about it. Especially nowadays, it seems like technical patterns, technical levels, it seems like there's a lot more noise in the market. I don't know, maybe that's just me in my old age, remembering fondly for the days of yore when everything worked and everything was clean and it was just easier. But anyway, what I'd be looking for here, longer term here, is if we saw a break below this, and basically if you see that break below and then you see it rally back up in the retest, that's really the confirmation sign that I tend to look for when you see a break. You see the initial plunge down, a push above that, a push back into it that fails to break through, and then the sell-off. But I'm getting a little ahead of myself there. Right now, all it is we've seen a little breakout, a little bit of a false start breakout. We've seen a pullback. We're still right in this range here. So keep an eye on the 2400 level. Just put that in the back of your mind. It's something to talk about. And if we get back to that level, I'll be discussing that in the blog. Finally, we've got the RUT. Nothing too exciting here. We've got the top of that range there. Longer term, we've got support here. The RUT's kind of pushed back to the lower end of the range. Hasn't broken below it yet. It's been sort of chopping around its 50-day moving average. We've talked about how the RUT tends to move, to the beat of its own drum. So I don't see too much all too exciting at the moment with that. As far as overall takeaways, on the Dow and the SPX. Yeah, I'd just be kind of keeping an eye on these areas right here. Those two indices are still holding well above that. They're holding near the recent breakout levels, but those are levels to keep in mind. I think the near-term action, the most interesting suspect to watch here is the comp to see how it handles, on this little pullback here to see if we do see a break, or if this is just a little earnings jitter, and then we see a rally next week after we get the expiration mess out of the way today. So anyway, that's what I'll be looking at for the coming week. But as always, stay tuned to the blog for further updates.